Hi, so Charlie giving you Monday's market commentary. Hope you're very well. Let's have a look at the markets and a few other things around those markets today from a trading perspective. First of all, someone asked us on Facebook recently when they posted up there just saying, oh, can we cover something on net open positions and volume? And we use those. And volume definitely has its places when trading, and some traders love trading with volume, and because volume spikes can be quite useful information. They tell us about when there's climatic trading taking place, and so volume spikes and just dips and lulls in volume as well. But in the main, do I personally use it? I do look at it as far as volume spikes are concerned. So if the market is racing up and then we get a big volume spikes coming through and I'm long, then I may start to ease my position. If, however, there's a volume spike on a breakout, so let's assume this was a breakout bar here above these highs, then that would be seen as a breakout bar, and so therefore if I saw a volume spike on that, then that should then mean that there should be some follow through on the back of that. So there's different ways of using volume. But that's about that. More importantly, when it comes to open interest, then what I can show you is something in line with this. We can get off of our site actually. So if you come up to resources and then go to Forex order book, then you can see where all the orders are, or where the price action and where the orders are, and where people are, the retail traders are, whether they're net long or net short. So as we can see at the moment, we've got the open positions in the retail sector, and so we can see that there's a huge 71% of people are net short euro dollar. Now actually that was at about 74% on Friday, so some people have obviously started to loosen up their short positions on the euro dollar, but still a lot of people short on the euro dollar, and still quite a few short on the pound, although the pound has loosened off a little bit as well. I think that was sitting around about 70 on Friday. So now what does that say to us? Well, as we know, very often the net retail traders as a collective are often wrong. So if I see a lot of traders who are short, then I have to then sort of be skeptical as to whether the market is actually going to come down, because the market likes to take out the net retail traders. So, and the interesting thing was that I was looking at the order book, and before FOMC last Friday, so right way back down from 133.50 right down here, that we were already over 70% net short then. So they're carrying a lot of pain up here. Why they're doing it, I do not know. But anyway, so we've got a lot of traders, and I'm going to do an article on this on a newsletter article this week. But there are a lot of traders who are net short at the moment, and the market's gone up and it's now consolidating. So we're going to see, and don't get me wrong, doesn't necessarily mean that the market has to go higher, but quite often it will do if there's a lot of shorts out there, because all those buy stops create more fuel for maybe some more upside. So we'll see if this is just going to be a sort of shallow sort of dip, or a small dip, maybe come back into the band here on the daily, and then see if we're going to push up again. So my view on the euro dollar is actually I'm looking for it to go higher again yet, but that's an overall analysis. I think it will do, but we'll see if it dips a little bit down first. Obviously it could come down to retest these prior highs, but let's have a look at the slightly higher time frame. If we go out to a weekly chart, you see, then I zoom out. Let's see if we can. I'm going to need to go to a monthly, right? Because we've got something in here, on here even. Let's see if I can zoom. Oh, that's not very good. It's not allowing. Old telecharts doesn't allow me to zoom out too far. But essentially, if I bring up drawing tool, so it's and I need to go into tools, don't I? I'm really good with this software, right? I'll go to trend lines, and actually, if I put it across, essentially. You'll have to sort of go with me on this one, because we haven't got the data to the left of the screen. I couldn't scroll it out any further, but essentially we've got a trend line which from the highs back in. Let me just have a look off screen on my charts off screen, just to double check on those. So we've got the highs from 2008, and then we've got these highs in 2011, and the trend line tracks across them a bit like this, and it's pretty much about there at the moment. Actually, I think it's probably a little bit no, that's probably about there. Yeah, that'd be about right actually. So it's crossing about 140, just above 140 at the moment, and so the potential is that the euro may want to come up for this trend line. So overall, now bear in mind this is a monthly chart, so this could take several months to get up there. So whether it'll get up to 140, because this line's going to be declining, but there certainly appears to be a pattern appearing here on the euro dollar that it may want to get up towards that level. So I'd be watching the euro for more price action to the upside over the coming months. Now, doesn't mean to say on a day-to-day basis. Let's take us back to our daily charts. Doesn't mean to say on a day-to-day basis it could pull all the way back to 134, 133, whatever, and then still come all the way back up again. I would be watching this on over the coming weeks, just to see if we do in fact start to push higher. So that's the big call really on the euro dollar. I'll have a quick look at a couple of other currencies. Let's have a look at the Aussie dollar. The Aussie dollar's had this fantastic run, as we all know. It's really run so far and hit so many target levels that I'd rather see a deeper retrace on the Aussie dollar. I'd like to see it come back to the daily 21 before I start getting interested in trading that. Even though it's just had a nice bounce overnight, I'd rather see a deeper retrace, considering it's hit so many targets up there. And then we've got the pound dollar, which is just strength, isn't it, really? And so it's come up a bit again today. It's come back within its trend channel since FOMC last week, and the potential is for it to trundle its way higher, maybe within that. But certainly at the moment, it's a fairly not easy pattern. It's playing within its trend channel, and it will continue to do so until that eventually breaks at some point. But for now, it's within that trend channel. It's a nice, easy one. And let's have a look at the S&P. The S&P, just pulled back, and it's almost given back a lot of the gains from FOMC last week, but it already had such a good run. So again, at the moment, it's still bullish. It could just be in the process of putting in a slightly deeper retrace. It's overall still bullish, but I did talk about the divergences that are in place. So once I see those confirmed, that when we do start to roll over, I don't know if it's going to happen from here. I think we could go a bit higher yet, but we'll see based on those weekly divergences. I'll do some more analysis on that for next week, and then we'll take it from there. But at the moment, we're above daily 50, above the daily 21, so we're still on the bullish theme of things for now, but being cautious. So it could still run up towards 1800 yet. We'll have to see. And there's a lot of bears out there, so that's usually favourable for the bulls. Right, let's leave it at that for now. Have a fabulous week. I won't be here on Friday. I'm away for the weekend, so I'll be back in touch on Monday.